Hi, I'm Mary Kupczynski, the CEO of Regulator. Welcome to this week's Regulatory Roundup. This week there were 1,672 alerts from 350 unique U.S. regulators, and 343 had to do with coronavirus. The regulator of the week is Nevada. Again, maybe they just finally got around to updating their books, but last night we got a ton of new rules. They're coming out of the Nevada Department of Business and Industry Financial Institutions Division. I'll start with the loan database the state mandated back in 2019. Well, now new regulations have come out on how it's going to be implemented. There is also a plan for an equal opportunity for credit in Nevada, which is really a competitor law to the National Community Reinvestment Act. So that's interesting. The state is also proposing a new regulatory experimentation program for product innovation, kind of like a sandbox. And finally, there are some proposed regulations having to do with consumer litigation funding companies. The topic of the week are VIX ETPs, and if you don't know what they are, you have about 2 more minutes before you're going to get in trouble for not knowing what they are. The SEC goes on a tear every once in a while where they pick a product and poke into it. Last year was ADRs. This week was the 5 fines issued to VIX, or volatility-related complex exchange-traded products, or ETPs. A number of firms were busted for not implementing robust and effective policies and procedures around suitability to investors. In each case, the advisors were suggesting the products to clients for long-term holdings when they're really meant for short-term holdings. And it was pretty clear the advisor didn't actually understand the product. So now that you're in the know, make sure your controls are in place. Otherwise, you might be on a future Regulator Regulatory Roundup show. And trust me, that is not the kind of shout out anybody wants. For those of you following cannabis, state cannabis regulators from across the U.S. announced the formation of a nonpartisan organization, the Cannabis Regulators Association, or CANRA, to better share institutional knowledge and regulatory best practices around cannabis-related products. And you can be sure they'll be included in our Regulator feed. The Marijuana Control Board of Alaska has adopted regulations regarding administrative hold and seizure, overlapping licensed premises, and they have a number of meetings this week, including one to discuss marijuana transportation layovers. The California AG filed a brief in defense of California's ban on flavored tobacco. The governor of Virginia announced he's going to introduce legislation to legalize marijuana in Virginia. For those of you following climate issues, the FDIC is the latest regulator to repeal any environmental disclosure requirements when you want to establish or relocate a bank branch. And on December 1st, the ESG subcommittee of the SEC will be hosting a meeting to discuss diversity and inclusion. In Compliance Corner, the NCUA board is issuing a final rule that amends the NCUA's corporate credit union regulation. The CFTC modified Form CPO-PQR for commodity pool operators that is now going to be requiring LEIs, legal entity identifiers, for commodity pool operators. FINRA changed its rules to reflect new names of its reorganized departments, which means we're going from RAD to CRED. RAD was the Department for Registration and Disclosure, and now it's officially the Credentialing, Registration, Education, and Disclosure Department. For those of you following crypto and tech, this week the SEC granted a company called Upstart Holdings the ability to operate an artificial intelligence-based lending platform that is going to facilitate the issuance of small consumer loans that won't be subject to certain SEC rules. The California DBO decided a Bitcoin ATM was not engaging in the business of money transmission in the state. Vermont charged a virtual currency services company $15,000 in fines for not registering in Vermont as a money services business. Because the company was forthcoming and participated in the investigation, they only were fined the amount they would have had to pay if they had registered in the first place. Also in Vermont this week, the governor ordered the National Guard to assist the state in its cybersecurity operations. And speaking of cyber, the SEC announced a new Office of Data Science and Innovation, which is going to provide the SEC expertise on data analytics, risk assessment, and structured disclosure. And for those of you who missed Regulatory Fight Club, great week this week. The North American Securities Administrators Association is urging the SEC not to move forward with its finders proposal because they say it threatens to harm investors by withdrawing oversight in an area that is prone to abuse. It's also going to be conflicting with existing state finders rules. Also in Regulatory Fight Club, the U.S. Senate Committee on Banking, Housing, and Urban Affairs is not happy to see that Fannie and Freddie are selling loans that would essentially eliminate some of the anti-eviction requirements that came out of coronavirus legislation. And continuing with this unique situation of state regulators coordinating but not under the federal umbrella, the Conference of State Bank Supervisors is moving forward with the idea of networked supervision when it comes to the future of mortgage supervision. But it's not all a fight because Chairman Jay Clayton of the SEC announced he'll be stepping down at the end of this year, and a number of the other agencies thanked him for his service. In our FINETRACKER this week, JPM is having another not great week. They're paying $9.8 million to resolve gender discrimination allegations with the Department of Labor's Office of Federal Contract Compliance Programs. I mentioned this last week, but if the U.S. government is a customer of yours, you'd better make sure you're following the new anti-discrimination rules. The former CEO of Wells Fargo and the head of the community bank got personally fined by the SEC, including a $2.5 million fine for the CEO. This week, Washington State announced it will also be filing a campaign finance disclosure lawsuit against Google. And of course, ByteDance and TikTok are still circling the drain with the current federal administration. The latest being another extension of time from the White House executive order that is going to get it through to the end of the month. And finally, for those of you watching SROs, the New York Stock Exchange is amending a bunch of rules having to do with charges relating to forwarding proxy materials to beneficial owners. And that's it for Regalytics US Alerts. Join me every Wednesday morning on LinkedIn, and for the longer version, see us on YouTube.